Oh, well, good evening, everybody, or good morning, or good afternoon, depending where you are. Today I'm going to have to talk about economics again, which is something I know something about. I've just been studying a lot of it right now. For Monday, the 26th of September 2022, unfortunately, I don't have any good news. Recently, I suggested the possibility that 2022 we could see a financial crash in October. But quite honestly, it looks like it's already happening. And some are even calling today Black Monday. It started last Friday, as it always does on financial markets. It wasn't looking good. And it started with the new British Prime Minister and his financial minister doing some shady business for the rich, making it easier for them, but not easier for the poor. And it's affected the markets in a big way. I won't go into all the details, but I will read you from my website some of the articles. I'll read you what is being said today, and it looks like a financial crash is happening. The pound collapsed today by 5%, causing serious repercussions on Wall Street and the stock markets around the world and with currencies. And now the pound fell to being on a par with a dollar one-on-one some stage today before rallying slightly. But I'll read you a little bit. Here's from my website. My website, by the way, is www.outthebottomlesspit.co.uk. Go to the front page because I have a very extensive website, but the front page, it's got news on there, and I'm focusing on this at the moment on my front page. So what it says here on one of these articles on my website, it says, I think it's the first article, plunge. This isn't some rinky-dinky stock, it's the British pound. Like I said, collapsed 5% today. That's massive. In fact, it's been the biggest collapse in 50 years. And of course, a depression or total collapse is something that happens gradually. It starts with something like this. In 1929, when they had the depression and the great Wall Street crash of 1929, something triggered the depression. Started on Wall Street, that collapsed by 95%. But then, over the next 3 years, then it became difficult for people. The prices went up, inflation was high, it was difficult to survive. People lost everything in many cases because they had no guarantees and they had no credit, and But today is far worse. Oh, by the way, in my analysis on one of the last times I was talking about economics, I said, how can we survive when the whole world economy is just based on debt? That's why I personally try to stay out of debt, to not use credit cards, to not use mortgages, to live within my income, even if you have to do without. And I think it's a much better way of doing things. If everybody did that, there wouldn't be the slavery to the big banks through debt. But now it's not just people that are in debt with credit cards and mortgages. Here in the UK, the average debt is something like £30,000 each person has. Fortunately, I don't have any of that, and I'm thankful for that. But everybody adds to all this debt by wanting so many things they don't need and buying it with somebody else's money. Well, there's a limit to everybody borrowing, and everybody borrowing, there's a limit. It's all going to crash. But I didn't come close. I just studied some of the world's experts in these fields. I said that we're in debt to 200 trillion. That might be right, but the actual number, the total number, is more like 2 quadrillion because of derivatives. And derivatives is exactly what I was talking about. One debt props up another debt to the extent that, like in banks, for example, you put £100 in the bank, walk away, they've actually only got about £1 of your money because the rest is lent out to others to make interest. And that's all very well as long as everybody doesn't want their money in the bank at the same time. But if they did, the bank doesn't have the money. And that will put them in considerable debt. And then the people they've lent to the money to, they will also be in trouble, like dominoes. So, you can't sustain debt of 200 trillion worldwide and 2 quadrillion in derivatives. It's just absolute madness. But anyway, here's on my website today. Starting off with that one, the pound has plunged by 5% in a day. And it's funny how somebody was saying that all the markets and all the banks, they're all like dominoes. So something bad happens in one country, then it affects everyone else, as you can see today. So, it says the British pound sterling currency has plunged 500 points to a record low of $1.03 in absolute carnage on the foreign exchange reserves. Yeah, it does look awful. It's a chart just going straight down on a graph. Unbelievable. All right. The beginning of the end is finally here. The pound is down 23% YTD, worse than most third world currencies. Wow. The pound against the dollar is sitting right at support levels from 1984. And this is all in one day. Strangely, all of a sudden, it's starting to make sense. I reported this the other day. That the Pope ordered all Vatican entities to move all their funds to the Vatican Bank by September 30th. That was ordered at the end of August. Most of them have already done so. I wonder why. What did the Pope know? Do you know that financial crash was imminent? Bulletin, the Chicago Mercantile Exchange has halted trading in GBP futures. Update 8:10 a.m. It's happening everywhere. Bond prices are cratering, currencies are cratering. It's just all red on the charts. Everywhere. Breaking. Moscow Stock Exchange drops 9.2%. In London, the Financial Times Stock Exchange FTSE 100 just hit 6,962, going down. Whoa. Canadian dollar in freefall, 8.20. Historic low, global currency in total freefall. All right, so that's just from one of these articles. Here's another one here by Tyler Durden, September 26, Monday, 1 p.m. Global gloom. World markets plunge to start the week as global currency crash hits maximum pain and beyond. So like I was saying last week, the crash is already here. I was saying it could happen in October. It normally happens in October. It looks like it's already started on September 26th, Black Monday, today. The rout which hammered stocks on Friday, nearly pushing them close at a new 2022 low, resumed overnight when the global FX crisis returned with a bang and a flash crash in the British pound, which as noted late last night plummeted 500 points in thin trading to fresh record lows. Confirmed the UK has no idea what it's doing with their shocking mini budget announcement on Friday. Yeah, to cut tax rates. Of course, that's good for the rich, no good for the average Joe. And people are complaining about it, but just announcing they're doing that, cutting the tax rates for the rich, just caused a panic around the world. Imagine how tight things are together with the banks and whatever governments do. It's on a knife edge, the financial system. Right. What is said there? Yes. Wow. Okay. Yes. Okay. The plunge in cable was, however, just one symptom of a bigger malaise, namely the relentless surge in the dollar, which overnight hit fresh record highs. Well, of course, it's artificial. The dollar high in value. It won't stay that way. It says as every dollar-denominated debt issuer in the world is suffering crippling pain and begging Powell, guy in charge of finances, to do something to ease the unprecedented shock of the strongest dollar in history, just as the world slumps into a global depression. Here it is. Alas, so far there's nothing but silence from the Fed, which will likely have to make some announcement on central bank currency swaps at some point before the open today to avoid an even more epic FX rout as traders await something to bring big time across global markets. So all across the markets it's having serious repercussions. What happened with the British pound? But of course there's a lot more things. He says it wasn't just FX and stocks crashing. British bonds also cratered. Alright, there's a lot here on here that I won't go into. It's all financial news for those in the know with finances and investment. But it seems serious because they don't have anything to keep the system going. He says we're in a period of global gloom with pessimism blanketing different countries for different reasons. So I suppose you're better off if you don't have loads of money you're investing in. It's really gambling, isn't it? But it lists a lot of companies here and stuff and the markets and what's going on with them. So I won't go into all these details. We don't need to do that. He does say geopolitical risks from the war in Ukraine to escalating tensions over Taiwan, unrest in Iran also weighed in on sentiment. Wow. Early in the session, a rout in Asian stocks also happened into Monday as rising concerns about global recession and a weak demand hit the region's exporters and material producers. Yes, about this I'm sure you've been knowing in the last couple of years about having all kind of problems with shipping and ships not being able to dock and bring their trade in and things slowing down, and the demand for products all over the world has gone down drastically, so this is not exactly helping either. That's another factor. Okay, that's another article. I'll just show you another article here. Right. Okay. It says here, banking crisis will start in Europe. Martin Armstrong. Well, it seems like it's already started in London. Banking, this is USA watchdog. Banking crisis will start in Europe. Martin Armstrong. By Greg Hunter. Legendary financial and geopolitical cycle analyst Martin Armstrong says nothing is going to get better by the end of 2022. He's forecasting chaos coming in 2023. Armstrong says the plunge in the stock market last week is all because of extreme uncertainty. Armstrong predicted a stock market crash 2 months ago and contends it's not over. Europe is in big financial trouble with Russian natural gas turned off as a retaliation from the sanctions. Armstrong explains, in Europe I believe they're actually deliberately doing this, and this is Klaus Schwab's great reset. They know they have a serious problem. They lowered rates to below 0% 2014, and they just started raising interest rates. Meanwhile, you ordered all the pension funds throughout Europe to have more than 70% government bonds. Then they took it negative. All the pension funds are insolvent. Europe is fiscal mismanagement on a great scale. There is no way it can sustain itself. We're looking at Europe breaking apart. Wow. So could Europe suck the rest of the world down the tubes? Armstrong says, oh, absolutely, Europe is the problem. The crisis in banking will start in Europe. The debt is collapsing. They have no way to sustain themselves. The debt market over there is undermining the stability of all the banks. You have to understand that the reserves are tied to government debt, and this is the perfect storm. Yes, the US stock market will go down short term. We are not facing a 1929 event or 90% fall here. Europeans probably by January 2023, as the crisis in Ukraine escalates, anybody with half a brain is going to take whatever money they have and get it over here. Well, so, okay, it's a lot more on that article you can see about things. As you can see, nobody is being optimistic of all these financiers and those who advise people on what to do with their money, Nobody is being positive, as you can see. They're all pessimistic right now. So that's to say it would start in Europe. You can see that on my website. Now here's the best one. This is by a very famous person. Greyus, this global collapse will feature food shortages, stock market crashes, and unprecedented panic. By King World News. This guy really knows his stuff, I must say. Unbelievable. And also he's made it available so we can read it. I'm not getting charged a whole bunch of money to read it. This one I find very helpful. This is what he says here. Greyes. This global collapse, this is on KWN King World News. This global collapse will feature food shortages, stock market crashes, and unprecedented panic. This is written September 25th. So, yesterday. All these articles just come out. They've just come out today. And he says total collapse. Today, alright, I won't get into all that, how famous he is and all that. No. He says here, he's the founder of Matterhorn Asset Management, based in Switzerland. He says here, as the dark years are nearly upon us, the world is now approaching survival mode. Admittedly, if you go to a high-class restaurant in New York, London, or Zurich, there are no signs of misery, but instead of incredible affluence. What is happening to Middle America or England has not yet reached Wall Street, or the City of London, where exquisite food is plenty and excellent wines are flowing. This, of course, is no different to the end of eras with major excesses and decadence. It was the same at the peak of the Roman Empire 2,000 years ago, in 1929. That's when the big crash happened. Or just before the Dow crashed 90%. 1929. I'm expecting it to be as bad as that. Main Street is already in survival mode, with cost of living increases of a magnitude that ordinary people can't afford. Energy, fuel, food, mortgage rates, rents, and most things gone up by 10 to 20% or more in just the last year alone. Well, everything's happened so quickly that people are in shock. But it is a fact that real misery has now hit ordinary people. Oh, here's a good saying from the UK from 150 years ago. As Charles Dickens wrote in David Copperfield, annual income's £20, annual expenditure 19 and 6. Only 4. Result happiness. Annual income £20, annual expenditure £20, ought and 6. Result misery. In other words, if you live beyond your means, it's misery. Well, now it's worse than living beyond their means. Everybody's living in debt. And when the debt collector comes looking, and people keep going in debt because they can't afford, God knows what's going to happen. Well, the Fed and other so-called independent central banks are doing all they can to exacerbate the crisis, make it worse. The Fed's official two tasks are stable inflation, full employment. But that's not what they're doing, is it? These crazy people, I said before, they're printing up $200 billion a month, or over $2 trillion a year. That's guaranteeing hyperinflation. Why do they do that? To try and keep the stock market from collapsing. To benefit the rich. Well, it's crazy stuff, isn't it? Really crazy. So yeah, this top guy is saying many of us are laughing at Powell and Lagarde. They're the guys in charge of all the finance and that, in the banking system, when they call increase and inflation transitory. Yes, it's funny how they find nice names for all the evil they do and harm people by destroying all the finances. But as one little guy said yesterday, said to me, well, I don't have any money, so it can't harm me. Well, that's good. I'd say for most people like that, stay out of debt, if it's not too late, and have plenty of food and water in the house. At least have that. At least do that much. But stay away from extravagance and more debt. Well, here's a good one here. Hyperinflationary rocket. It's absolutely incredible that the heads of the Fed and the European Central Bank, the world's biggest central banks, don't have the basic knowledge to fathom the unlimited free money, printing it up. Just printing billions and trillions for over 10 years is like a matchstick to light the biggest inflationary rocket in history. It shows a big rocket there going up, inflationary, hyperinflation. Yes, it seemed to take a long time before the inflation rocket was set alight. The explanation is self-evident. There were different compartments in the rocket. Before the consumer prices were set alight, the inflation flame reached all the financial assets such as stocks, bonds, and property. Right. I won't go into all the details. You can read. If you want all the details, you can see it there on my website. So the Fed could continue to fulfill its main purpose, which is to make the rich richer. I couldn't agree more. As the Fed was conceived by private bankers in Jekyll Island in 1910, for the main purpose enriching the bankers and their friends, it's clear that this elite group must be looked after first. My golly. Wow. Okay, this is interesting. Interesting. In the autumn of 2021, as the inflation flames reached consumers, the Fed, the European Central Bank, and other central banks were stuck in their zero inflation and zero interest rates lethargy. But as 2022 progressed, many central banks around the world woke up to the fact that inflation's here to stay. Since the wealthy probably have diversified into real assets by this stage, it was then time for the bankers to start tightening. Globally, the Fed and their fellow banks are without exception always behind the curve, so they flooded markets worldwide with worthless printed money at zero cost for much too long. As I told you, it's $200 billion a month the United States prints up. Now they're waking up the fact that accelerated money printing, debt creation since 2019, not just inflationary but hyperinflationary. So the inflation rocket is now fully ignited and it's just started its journey. Well, they say that in the UK, prices have gone up by a good 20%, 25% the last year alone, when before we didn't have any inflation. Well, 1% or something. Paul Lagarde and at least 32 other central bankers in the world have gone from lethargy to panic mode and are thus coordinating a series of rate increases globally. Well, this is very good, but I only just read a tiny bit of this article. It goes on, there's so much information, explains how it's done, and that's where you get these numbers I didn't know about before. I thought I knew some of them, but it's basically say by printing up so much money, to prop up the rich and the stock markets, that it's going to bring the whole financial system down, because you can't print up $300 billion a month like they're doing in the United States just to prop up the stock markets and prop up the businesses. It's terrible for the people, because, like I say, then what's worth something now is it's going to cost 30% more in a year's time and stuff, and people can't keep up because their wages can't keep up with the inflation. It's a nightmare. So that is what's happening as we speak. Well, I'll just finish off here by saying, please go on my website. I'll keep up to date with all the latest. And I put a lot of stuff on my website on the front page about today being Black Monday again, and pound collapsing 5%, and the world economy, because it's like a bunch of dominoes, it doesn't take much to crash the whole system. And today's just the beginning. That's just one major event affecting the rest of the world. But if it's on course to make a proper, complete financial crash, then I think we'll see some things developing over the weeks to come, right through October. Let's hope it doesn't get too bad, and it might be like one of the minor crashes and not one like 1920. That's why I pray that it won't be. All I can ask people to do is pray and prepare, and the best way you can prepare is make sure you've got plenty of food and water, a month's supply in your house, at least that, and pray for the protection of your families. That's all I can do. But I hope this was some help to you. Please go on my website, www.outthebottomlesspit.co.uk, on the first page. And today's all about finances. Okay, guys, thanks for listening. Have a great day wherever you are.